Hello everyone, welcome to Mastery. It's Rosario's Academy. In this video, we're going to discuss about the basic structure or basic format of final accounts with the help of the specimen copy. Let's discuss. Hi guys, please take a look at this. This is the format of trading account. As I mentioned earlier, trading and profit and loss accounts are prepared for a particular period, not for a particular date. So it is headed with trade account for the year ended. It is nominal account in nature. Obviously, it has a ledger format. So left side is a debit side and right side is a credit side. Left side accounts begin with the keyword of to and the right side accounts begin with the keyword of buy. Let us discuss all the accounting elements one by one. Left side, first one is opening stock. It is nothing but the closing stock of previous year. Then purchases minus purchase return. We have to less the purchase return and the net purchase should be written at the outer column. Then direct expenditure. First one is carriage inward. It is nothing but transportation charges from the supplier house to our business house. Then wages. People who are involved in the production or directly involved with the warehouses and all, for them we have to make the payment. So such wages are coming under this category. Then dock charges. Dock charges is nothing but the charges to be given at the harbor in order to bring the goods or in order to release the goods. Then octroi, it is nothing but the duty charged by the government for the goods which are permitted into a particular municipal limit. Then royalty, if we are using anyone's right, patent rights, then we have to give the royalty. Then import duty, when we are importing the goods from other countries, then we have to make the payment to our government. Then cost of good manufactured. If it is a manufacturing company, before prior to the trading account, manufacturing accounts are prepared, that I have told you earlier. So out of which the cost of goods manufactured or cost of production value should be brought and that should be written out. Then finally the account should be balanced. If the difference amount comes at the debit side, it is gross profit, and if the difference amount comes at the credit side, it is gross loss. Okay, so this value should be carried forward to the next account, which is profit and loss account. Hi guys, let's have the format of profit and loss account. Same as trading account, profit and loss account also nominal account in nature. Left side carries all the indirect expenditures and right side carries all the indirect incomes. Let us discuss one by one. Office and administrative expenditure. These are all the basic office expenditure like salary, rent, printing and stationery, okay, courier charges, legal charges, some stamp duties and all. Then audit fee, at the end of the year, our account should be audited by an auditor, so for him we have to make the payment audit fee. Then establishment expenditure, maintenance charges. Then trade expenditure, it is nothing but the necessary charges paid by the registered company. Okay, but trade expenditure would fall on the profit and loss account if we are having office and office expenditure. If we fail to have the office expenditure, then trade expenditure would go for the indirect expenditure. Then general traveling expenditure, lighting, insurance. Lighting, if it is factory lighting, then it should fall on direct expenditure. So office related lighting and all, we have to keep it in the P&L. Then insurance premium. Then selling and distribution, okay, like carriage outfit, advertisement, commission paid, brokerage. Then bad debts, the debtors who fail to make the payment, who are coming under the bad debts category, it's a loss for the company. Export duty, when the finished goods are sold to the customer, if the customer is in outstates, then we have to bear the export duty. Packing charges. Then other expenditures, losses like repairs, depreciation, when we are using the fixed assets, its value is getting reduced, so such reduction is termed as depreciation. So that it's a loss for us, that should be debited as an indirect expenditure at profit and loss account. Interest charges, okay, then if we get any loan from the institution, we have to make the interest. Then discount allowed, it's a loss for us. When we are receiving the payment from the debtors, we may allow some discounts allowed, that we have discussed at the 3-column cash book. The provision for discount on debtors, for that sake also we are making some provision to meet that loss. So such should be kept as a indirect expenditure at balance sheet. Then bank charges, okay, many folio charges and all charged by the bankers. Then interest on capital, as I mentioned earlier, ownership and business are separated. So for the whatever the capital that we have received from the owner, we have to make the interest. So it's a loss for us. Donation and charity. Then loss of sale on fixed asset, when we are selling our fixed assets, we may get some loss, so that should be shown. That abnormal loss due to fire, theft and all, if it is not covered by insurance. Then other miscellaneous expenditure. When it comes to the right side, it is started with the gross profit, which has been brought from the debit balance of trading account. Then all the indirect incomes are shown at the right side, like dividend received, income received, commission received. Okay, dividend, if we have invested some money on any shares of some other company, then we can get the dividend. So that is an indirect income. Then if we are recovering some money from the bad debts, that also it is an indirect income. Then if you get any profit out of sale of fixed assets, then it should obviously it must be a indirect income. Then apprenticeship premium, if we are giving a training by the resource person, then it is a fees from the people, it is an indirect income. Then other miscellaneous receipts. So this is what the format of profit and loss account. If the difference, finally it should be balanced. If the difference amount comes at the debit side, it is treated as net profit, and if the difference amount comes at the credit side, it is net loss. Net profit or net loss, it should be transferred to the capital account of the balance sheet. Finally, we have the format of balance sheet. Balance sheet is prepared on a particular date, so it is headed balance sheet of as on. Balance sheet of so and so as on, not for the year ended. And it is not an account, it is a statement, so there is no any to and by and all. So left side carries liabilities, right side carries assets. Left side carries liabilities along with the capital, right side carries assets. Finally it should be equal. So capital plus liabilities is equal to assets. So this is what the equation of balance sheet. Let us discuss one by one. First one is capital. So it's nothing but owner fund. If we have arrived net profit, it should be added. If we have arrived net loss, it should be subtracted. If we have to pay any interest for his capital, it should be added. And for drawings and interest on drawing should be subtracted from the capital. And if he is paying any income tax, that also should be subtracted. Finally, the net capital value should be written at the outer column. Then reserves. If we want to keep a particular part out of the profit, that is coming under the reserves. So companies are not at all distributing all the net profit. So the companies are commonly not distributing whole profit to the owner, rather part of it is kept as a reserve to meet the contingencies in future. So employee reserves, companies, so many reserves are there. Then long-term loans, it is given by some institutions, debentures and all coming under this category. Then current liabilities, bank, it's a short-term facility, bank overdraft, cash credit. Then outstanding expenditure, we have got the gain, but the things yet to be paid. We have got the gain for the financial year, but still the payment is outstanding for the financial year. So it is a liability for us. Unearned income, that is received, income received in advance. Okay, for future gain we have received the money, so it is not belongs to the current financial year, so it's a liability. Then short-term loan from the banks. Oh, within 1 year the things can be paid or shown at the current liabilities. Okay, short-term liability. Then sundry creditors, we have to make the payment to our supplier, so it is a liability. Bills payable, yeah, we are accepting many bills, so we have to make the payment on time, so it should be shown at the credit side. And provisions, if you are keeping some money for tax and all, so no, periodically we have to make the payment, so provision, employee benefit stuff and all we can keep aside as a liability. Then when it comes to the asset side, first one is fixed asset, intangible. Okay, it is untouchable, like goodwill, patents, copyrights, trademarks. If we want to register our logo and all, it is coming under the trademark. Then copyrights, if you want to take a copyright for any of our product, then we can put it under that copyright. Then patent rights, if you want to register any of our manufacturing patent, then we have to register under patent rights. All these are all the assets which are unseen. Then yeah, computer software also, it is unseen, it is loaded with a computer. Then tangible, that can be touchable, okay, it's a visible, so land and building. So from the assets the depreciation should be reduced, and the outer column the net value is, this is the current cost of the asset. Okay, so each and every year it is getting reduced by its value. So for building, land, plant and machinery, furniture, computers and all, we can come across depreciation. Okay, vehicles, office vehicles. Okay, so then investments, long-term investments and all coming under that category. Then short-term assets are coming under the current assets. Okay, within 1 year we can make it into the money. Okay, the liquidity is so high, very short, within a period we can convert this into another form. These are all called as current assets, that is stock, advance given to the people, sundry debtors, that the amount recoverable from our customers, then bills receivable that we are making, we are drawing the bills for the money outstanding. Then prepaid expenditures that we have paid already, the gain belong to the forthcoming year. Until we get the gain, it is treated as a current asset. Then accrued income, okay, we have earned the income but still it is yet to be received, it is yet to be received at the end of the financial year. Then cash at bank. Then preliminary expenditures, some basic, when we are starting the company we may have to come across some fictitious, okay, imaginary expenditures that are coming under the fictitious assets. Finally, all assets should be equal to the liabilities. I hope you got some basic idea. By applying these formats, we can prepare the final accounts easily. Hi guys, I hope you must have understood that whatever we have discussed with the screen presentation. With the help of this structure, we are able to prepare our final accounts easily. Thank you so much for watching.